Thanks for joining us for the Purdue University CME Group Ag Economy Barometer August 2025 survey results. I'm James Mintert, Professor Emeritus in the Department of Agricultural Economics here at Purdue University, and I'm going to share with you the highlights from the August 2025 survey. The Ag Economy Barometer index fell 10 points to a reading of 125. The barometer has now fallen 33 points from its 2025 peak that was set back in May at 158. The current condition index was virtually unchanged this month, rising just 2 points to 129. However, is down 17 points from its 2025 peak of 146 that was set back in May. Future expectation index fell 16 points to 123, and the future expectation index is now down 41 points from its peak also set back in May. The Farm Financial Performance Index was nearly unchanged, improving 1 point to a reading of 91, and this month's index reading was 20 points below its 2025 peak of 111 that was set back in January. The Farm Capital Investment Index rose 8 points to a reading of 61 and was probably the biggest surprise on the report this month. This month's investment index reading matches the highest reading of 2025, which was set back in April. If you look at the change that took place, the bad time percentage reported by producers fell 5 points to a reading of 62 this month, while those saying it was a good time to make investments actually rose 3 points to 23%. And the rise in the investment index overall was supported by livestock operations, much more optimistic view of the future. Short-term farmland value expectation index reading of 112 was 3 points lower than a month earlier and was 12 points lower than its 2025 peak of 124, which was set back in May. For the second month in a row, we asked producers what their expectations are for cash runner rates on farmland in their area in 2026, and 3/4 of the crop producers in this month's survey said they expect cash runner rates to remain about the same in 2026 as they were in 2025, and just 12% of crop producers expect cash farmland rental rates to fall in 2026 compared to 2025. We continue to ask producers about their expectations for ag exports, and producers became more optimistic about future ag trade prospects in August. The percentage expecting exports to increase rose 9 points to 52%, while the percentage expecting exports to fall actually fell 3 points to 10% of producers in our survey. Overall, producers' trade outlook was the most optimistic reading of 2025, exceeding the previous peak that was set back in May. In a follow-up question, we asked producers how likely is it that new foreign export markets will open up to American ag goods. And some of the optimism regarding trade really appears to arise from an expectation that the U.S. will have more new export market opportunities open up. 68% of the respondents in this month's survey said they expect to see new markets open up. That's up from 64% last month. And in previous periods, when we asked this question back in 2020 and 2021, responses were much closer to about 60%. We asked a couple of questions this month regarding farm financial stress given the downturn that's taken place in the crop sector. And the first question was, compared to last year, do you expect the size of your farm's operating loan to be larger, smaller, or about the same as this year? And expectations for operating loan size were up somewhat from the last time we asked this question in January of 25, and even more so compared to January of 24. This month it was 22% said they was expected to have a larger operating loan. That was compared to 18% in January of 25 and 15% who felt that way in January of 24. We followed up with the producers who said they expected to have a larger operating loan and asked them why that was the case. Was it a result of increase in input cost, an increase in operation size, or the need to carry over unpaid operating debt? 22% of producers expect operating loan size to increase this month, and among that group, 23% said it was because they expect to carry over unpaid operating debt into the new year. That percentage of producers expecting to carry over unpaid operating debt hasn't really changed since January of 25, but it is up sharply compared to January of 23 and up modestly compared to January 24. So for perspective, in January of 23, just 5% of the producers who expected to have a larger operating loan said it was because they expected to carry over unpaid operating debt. This month, that was 23%. You can get more details by downloading the full report available on our website, purdue.edu/agbarometer, and more details are also available on our podcast, Purdue Commercial AgCast, which is available on major podcast providers and at purdue.edu/commercialag.